Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, this morning is looking substantially different. We might have some fun today. Let's go and look at the charts here so you can see here in the S&P 500 yesterday. Really, there was a little bit of relief going into it, but after the S&P 500 opened, we started getting the headlines and markets tanked. It was pretty ugly, but I mean, we didn't hit new lows. We didn't beat the overnight lows. And in the end, the sanctions that Joe Biden put out were a little bit weaker than I think the market anticipated. Nord Stream 2 was the worst of it, of course. And then the rest of it was just like attack our buddies. We can talk about, attack the rich buddies is what it was. Okay. Well, we can talk about that in a little bit. Overnight, though, it looks like we're a little bit higher. Just a little bit. We're, of course, not above these 60 levels, right? Which is where things could really turn risk on. Here, you got the treasuries taking another little clip lower. Hold on a second. I actually kind of think I want to be... Okay. Anyways, going through the others real quickly here. You can see oil also coming off of the tensions just a little bit, though. I think that oil can probably remain elevated because the Nord Stream pipeline has been shut down. You got natural gas. Nothing too crazy yet in natural gas. Gold and silver... holding their gains and actually maybe even extending them a little bit there. And copper is still within the range. So copper is the one we should really keep an eye on the copper, I think. Right. In fact, I think what I'm going to do, I'm going to change this. Let's see here. Soybeans. We don't need soybeans. We'll do copper. HG. I want to watch, keep an eye on that. And then Bitcoin. So Bitcoin, it was getting a little ugly yesterday, but they pulled something out and we're seeing a little bit of upside again this morning. And again, it seems to be following the S&P 500 really, really closely. So keep an eye on that, right? Man, today had so many icebergs in the ES. I can't remember that many for a long time, especially at 43.35. And even after that, after the first time break, are you talking about here in the overnight session? Switch the camera over here. Also got Share Vision going here. I can give you guys the link if you want to pull up the browser on Share Vision. For anything interesting to happen on ShareVision, you got to get over 30 viewers. I don't know if we're going to get there without like kicking you guys all off of YouTube and sending it to ShareVision, but I do want to give them a try out for at least a week. We'll see where we go. I kind of feel like they need to add some. I wonder what would be like a killer feature, Overnight action since London. Okay. And were you seeing on both sides? I mean, in the action, here's the thing. When we come back and look at like what are our determinants of order flow and everything, right? Well, we've had a lot of risk off flow, in the markets as of late because of the concerns about the whole Ukraine situation. Only on the ask. Oh, now that's interesting. That's really interesting. Hmm. Well, today we come in here. It looks like the liquidity is doing a lot better, right? The liquidity is doing a lot better. Um, I am seeing gold take off here, which is kind of curious. Not seeing a huge change in the dollar, nor are we seeing. Well, we see a little bit of a buy come in there in the 6J, and the treasuries come into it as well. There. But I'm wondering here, given the setup and everything, if this is not a situation where we could see a lot of money get put to work, right? So it's Wednesday. There's no news today. There's no significant news today on the docket. No economic numbers being released today. Tomorrow we got some Fed speakers and preliminary GDP, and then what's Friday? Core PCE price index. Core PCE price index is going to be a pretty big deal, right? But when you get those kind of no news Wednesdays, that can often mean a really good time for passive flows to come in and buy things, right? You ever remember those days where it's like it's a Wednesday, you don't expect anything to happen, and then it ends up being a massive trend day? This is one of those days where we should probably look out for that scenario. Do people trade before and after market hours? Sure. I mean, the most so when the when the extended session starts, you tend not to see very much activity. Like there's a little bit of activity like right there at the very very beginning, but then after that it cools off until the Asian markets open. And even then not too much happens until London opens. So if you wanted to start earlier, starting when the London session starts, if you're on the East Coast, is like a really good idea. Now, let's come back over here. Let's just make sure we got everything. There's not any. Okay, so Ukraine president says cannot predict steps from Russian-backed separatists. Okay. So there is maybe a little bit of, headline stuff going on still. And I think that's the problem. I thought there were algos. Well, there's people that trade the extended session. We've had people come in and want to try and do it. There another mention? Oh, there we go. Well, so if you're seeing icebergs on the ask, FTH, that, I think that kind of suggests that maybe there are still people hedging themselves short. So I'm going to try and lay out a bull case here, okay? Number one, the sanctions on Russia were not as strong as feared, okay? So that's a really good trigger, to kind of get things going. And overall, at the moment, I have no evidence to suggest that things in Ukraine are going to escalate. Okay. If I'm wrong about that, then we're going to be really really wrong. But the kind of the issue here with the Ukraine thing is that we don't get very much information. That's a part of why the market has been behaving the way that it is because they're acknowledging that we can't know a whole lot about this situation. But right now, I think the given trajectory is that things are cooling off over there in Ukraine. It doesn't look like Ukraine has any intention of like coming in and like pissing off the people in those breakaway republics. And so probably you'll just see Russians occupy that area and things die down. then maybe things flare up again later in the future. But I don't see immediate geopolitical risk like we did last week. So that's the next thing. Next, there's been a lot of short, like this market, the market sentiment is extremely bearish, and you're seeing a lot of bearish hedging. Yesterday, they went several points short on really nothing burger headlines, really, right? So this market was a little bit touchy, right? And then on top of all of that, it's been like this for like 2 or 3 weeks. When you add on top of that the whole inflation thing, and by the way, I might add that the one bad thing that really came out of all of this was that Nord Stream 2 did not get certified, which means energy prices continue to go up, which means still more inflationary pressures. So uh, there was some expectation, or there was some thinking, I think, in the market that, hey, maybe this Russia thing will kind of hurt the economy and have to force the Federal Reserve to back off a little bit. Don't see that anymore. I'm not so sure that the Federal Reserve is going to do the 50 basis point hike, but I'm pretty sure that they're just going to continue through with their plans. So yeah, I could open up like the footprint charts, but I think that we should be more focused on what's happening right now. What kind of flows do we start to see come in right now, right? Anyways, so I think that there might be some people, particularly in the treasury market, they're going to have to catch back up. Like I think that a good chunk of money tends to get allocated on Wednesday. So that's kind of, I think, the bull case, right? Bear case is something bad will happen in Ukraine, right? The economy is slowing down. So that's kind of what I think we're looking at. We did see a little bit of an initial buy here in the treasuries, but should note that it was driven primarily by correlations with the 6J moving up, and the order flow on the downside is appearing for the moment to be much stronger. So we'll see what's going on there. If the 6J is just kind of, moving around, or if there's a larger trend coming in there in the 6J. Japanese yen, that is. Oh, damn. Okay. Well, we got a good number of viewers on Share Vision. I'm just gonna keep that in the background. Let's see if there was anything interesting happen overnight on Twitter. The market ear asks, Spoos starting to look beyond Russia? That's what I think might be happening. Stephen Dill says, with crypto exchanges, you aren't trading against the other traders, you're trading against a house. The exchanges are far closer to the bucket shops of the 1920s than to normal markets. I think there's something to that. They are not there's some shady stuff going on at many of the exchanges, yeah. We push back. Jonathan Farrow, who I guess is from BlackRock, says we push back against the notion that the recent pulling forward of rate hike timing and higher bond yields imply lower equity valuations. The cumulative path of rate hikes matters more for valuations than the speed of repricing. That path hasn't materially changed, says BlackRock. Brannigan Barrett says the absolute value of rates is what matters. Question then is, what level of rates is too tight for equities? Well, I think that any increase in rates is going to have effect on companies that are on the edges. Is that the right word? I was looking for a more eloquent word there, but I didn't get it. for some of these companies that were high flyers and were just sitting at ridiculous equity valuations that there's just no way in the world they were ever going to return that amount of money, then any kind of increase is going to matter, right? Because it's the amount of money coming into the market. So Jonathan Farrow's analysis there, I don't know what would be the basis of it. It sounds like that they're taking it more from a valuation perspective, and they're kind of using a valuation formula. And I think that that really ignores the more key point here, which is that the money coming into the market and pushing asset prices is up just because they need to park their money. What are you saying about Facebook here? Is Facebook not doing so hot? I'm interested. There's a couple of stocks we should come in here and look at a little bit. Let's come over to TradingView for a moment. Meta Platforms is what they call themselves now. Huh? They did change the name. It's not too bad. But what I'm really interested in is what WAC is doing here pre-market. So the other day, Donald Trump released the iPhone application of their Truth social media website. There was, of course, many technical problems with it, but I am just sitting here like, wow, they really bungled the release. They released it on iPhone first. First of all, the platform that's most likely to ban their application. Second of all, you're not going to do a desktop app? What the heck? No desktop app first? What the heck is wrong with these guys? Why would they? That makes zero sense. So DWAC was up because they released the app, but the more and more I see here from DWAC, the more I'm like, I don't see this as a company that grows and takes off, guys. So they're a little bit lower today, but not below the previous day's low. So we're going to have to come back at the end of the day and see what happened to them. Yeah, how can order flow be random while it causes price to move? What do you mean by that? Your question doesn't make any sense to me. If the information flow is not random, well, I mean, a lot of information is, as far as we can tell, random, right? Like, that's the thing, is like what's coming into the market on a play-by-play, minute-to-minute basis. Super hard to predict, dude. Super hard. It's just like some very remote specific situations where we might know something that allows us to predict what the orders that are going to come in next will be, right? We can't predict all order flow, right? But there might be specific windows in which we might be able to predict it based on the information that we have, right? But that also means that there's going to be many time periods where price just moves around a lot and we don't know what it's really doing.
Release of the US Red Book year on year at 8:55 a.m. Eastern Time. It saw a prior read of 15.4%.
What's the next post in here now? Oh, come on. Show me the picture. Twitter's not showing me the picture. That sucks. Oh, well. Did the Russian situation shake out weak European longs? Asks the market ear. Who was that, Pommy? What are you talking about? Oh, did I not even start my stream? Oh, there we go. Now it's streaming on ShareVision. I guess I have to click an actual button to like be live. Okay, does look like the Treasury's coming back here now after that initial push the other way coming from the 6J. I am though seeing a little bit of decline in copper here. A little bit of a decline coming in. Could you hear my new squawk? Is that what that was? I'll have to close that then. Something changed in my audio. I'll have to sort it out later. Let's reset things here. Are we getting any spreading? It's not clear what kind of spreading, if any, we're getting at the moment. I am seeing, however, that the order flow in basically all three instruments appears to be to the sell side. There's no evidence that Tether is a fraud. Yes, there is. Here's a summary of multiple investigations and why the Bitcoin ETF is being denied. And then the person burns the file of evidence and says that there's no evidence that Tether is a fraud. Yeah. Oh, Carbon County gets a snow day. Dude, here in where I live, it was like a hurricane all night, man. It never let up. Like, it wasn't, I don't know if it was like the worst winds. I don't know if we were getting to like 100-mile-an-hour winds like we had that one time. But I think there was significant downtick there at 09. But that is kind of like returning back to like where we were. So there might be a little bit of balance there. We'll see. If they just go 8.5 and then come back down to the lows, that could be significant though, huh? When price aligns itself in a backtickless trend, then how can it be random? I still don't understand your argument here. Did I already read that out and I just missed it before? I don't know. It does look like the 30-year is kind of being really influential here. So if we get a little bit of steepening come into here, that could be really good for us, but we'll see what actually happens. The market is not random. A lot of market action is random. Look, the orders are what moves the markets. There is not always or organization or rhyme or reason to what the orders are doing. Only when we are in balance? Well, not even that. Like so as an example, say we have a, well, what would be a good example of something that were to come out? Let's say some headline comes out. Let's say some headline comes out that's risk off. Okay. So we start to see the S&P 500 start to sell. But then it just so happens that because today is Wednesday and there is an S&P 500 fund that has to allocate a lot of their shares because people have been contributing to their fund this month and they haven't done their buying operations that month because things were kind of nasty and they've been putting it off or whatever the deal is, and they come in and they buy up the S&P 500. You know, it doesn't follow what the news was. Was there any way for us to have known that that thing was going to happen at that exact moment? No. And what you could see happen is the combination of the news pushing it one way and then this buyer coming in and pushing it back the other way. There's absolutely no informational content behind what this buyer is doing. It's just systematic trading from an index fund, right? It ends up pushing the market higher in the end. How do you not say that that's random? Explain to me how the market moves when there's new news. Sure, I can. Because orders come in and those orders are going to have impact even if they're completely random, right? Here, what I'm saying is I could come in and I could flip a coin, and based on that coin flip, I could come in and buy or sell 1,000 contracts, and it would move the market and it would move the market in the direction that I was buying or selling. Is what I did was random. I flipped a coin, right? Whether or not there's information behind the orders, whether or not there was a reason for them to come out, doesn't matter. What matters is that the orders were executed. You clearly don't know how the market moves because this is empirically proven scientific mathematical facts that I'm sharing with you. Orders impact markets, period. Doesn't matter why they came in. Market will react afterwards differently if there's like the traders know what's happening, but the orders still have an impact regardless. So I think what you're trying to imply here is that there's some secret cabal of people that know exactly, have decided that the market is going to move a certain direction, and it doesn't matter how things play out, that they're going to move to that particular price. And that's nonsense. You have to trade it there. You have to trade orders. If you know that it's going to get to a certain price, you can calculate exactly the number of orders that you will need to push it to that place. If rise is not random in the case of trends, well, so here's the thing. It doesn't. Here's, maybe think of it this way. It doesn't matter if price is random. You see, the orders are going to move it. The orders are going to move it. If you want to predict something, predict the orders. If you can predict the orders, then you can predict where the price is going to move. If you don't have something that can help you predict the orders, no reason to trade. Right? But this is different from these people that they say, well, people have certain patterns of behavior and they're going to do X, Y, and Z in this particular pattern consistently. No, there's absolutely no scientific evidence to support that notion. It's an interesting idea, but I think that what we've learned is that even if there were consistent behaviors in how people act, that it wouldn't matter because these large meta orders are just way more significant. Anything else, the inherent biases of people are just going to look like noise, right? It might matter to you and how you trade, but in the larger scheme of things, in terms of trying to predict where price is going to go, it becomes irrelevant. How do you predict orders? Well, so watch the most recent video that I put out, the inelastic markets hypothesis. And towards the end of the video, I list out a number of determinants of order flow that the researchers hypothesize could be effective at predicting future order flow. Yeah, you can't predict all of the orders. We're just looking for a certain situation where we can. So if you weren't here earlier, I'm going to lay out the case here, right? What are the flows that we expect to see today? And what are the flows that we've been seeing? One of the flows that we've been seeing is risk off. A lot of market makers have come out of the market, right? Now, when you look at the order book today, okay, it's not perfect. I would prefer that we're more like 3,000 now, and we're not. So the liquidity hasn't recovered as much as I had hoped, but it's better than it was yesterday. Okay. So you can already see some of the flows that disappeared because of that risk off are coming back. Okay. Next thing was we had a piece of news yesterday, which was the sanctions that were going to be placed on Russia. The worst of it was Nord Stream 2 pipeline. It was better than expected. It was not as aggressive as people expected. Okay. So that's could encourage people to put on risk, right? Because changes in beliefs about future fundamentals or order flows is something that can be a determinant of order flows, right? So there's been a change in people's beliefs about sanctions because of that particular news, right? There's also, I think, been a change in people's beliefs about the possibility of an invasion of Kiev. At this point, I think that the market is starting to see that Putin did exactly what the U.S. administration said he was going to do, except for that the U.S. administration made it sound like it was much more a bigger deal than it really was. It wasn't a full invasion of the country. It was just of those select breakaway areas. Okay. So that, again, that's a change in people's beliefs about future fundamentals and order flows that could potentially create orders here today, right? Now, another thing that I can use to determine future order flows is systemic strategies that have to come in and allocate money regardless of what is happening. Okay. So that's where I'm saying sometimes when you get a no news Wednesday, you can end up with really strong trends because these index funds and stuff decide that that's the perfect time for them to come in and do their thing. And since we've had a lot of bearish action for the past 3 weeks, these guys are probably a little bit behind and may have to buy a little bit here. Okay. And on top of that, you have a lot of hedging that's been going on in this market. The amount of put buying that has happened over the last week is like crazy. It's so high compared to what it was before. And now the S&P 500 is higher. So if the S&P 500 moves up higher, what's going to happen? Those guys are going to have to cover their puts, right? So these are all a couple of things that we could use to sort out this morning that there might be some risk on movement. And so that's why I think that we might be able to predict some future orders. Another one that's I think really pertinent here in the treasuries is, again, the worst thing that happened with the sanctions was that Nord Stream 2 pipeline certification was halted, which is bad for energy supplies in Europe. And what is that? That's an inflationary pressure. So the plans for the central banks to have to deal with that, right? To have to deal with that, is still on. They're still going to have to raise rates. And this kind of idea that they might be able to back off because of the Ukraine situation kind of doesn't look so likely anymore, right? So there's another flow that we can consider there, right? Now, a flow on the opposite side of the aisle here is going to be that there could still be some headline risk, right? And market sentiment is very, very poor right now. So you could still see some continued selling. So now what do we got to do? We got to come in here and look at what's going on in the market. So what has been going on in the treasuries as we've been watching it? There was a little bit of a push up at the beginning that was driven largely by the 6J, right? Driven largely by foreign currency flows. So that doesn't contradict any of the planned flows that we saw. It was just an unexpected flow, which was money moving into the 6J. I don't know why that was happening. We should probably try to sort out why. But there was some flow coming into the 6J. But then we saw some more selling coming into the treasuries. And overall, we've seen more market sells than market buys since the open here in all three of the major treasury instruments, right? So how does that match up with our planned flows? Well, it does match up that there does appear to be some risk on order flow coming into the market, but so far it's not so significant. And probably for these flows that we're really talking about, for us to really see them, we're probably not going to see them until the S&P 500 opens, right? So for right now, because of what we can see on the DOM, you know, we're still within the boundaries, right? None of our hypotheses about the flows that we expect to see have been invalidated by what we see on the DOM, right? You have too much emphasis on singular orders when price, but every order matters, NASDAQ killer. Every order matters. The buy and sell puts, which cost them little or nothing. I think that if the S&P 500 turns risk on, you could see some pretty dramatic buys just from the short covering. That's my hypothesis. We'll see if they break the overnight high. So it'll be like above 43.40. I think you should see some pretty aggressive acceleration, because that would be the point at which everybody is going to be like, okay, yeah, for sure, I definitely don't need to be hedging this anymore. Unless some other headline comes out that contradicts it, right? Right now, the treasuries seem to be fairly free to move across the range. So you got, okay, so the DOMs that I have here, these, where's my pen? The S&P 500 is over here on the left. I don't have NQ up anymore. It was you know, it was kind of slowing things down when things got crazy, so I kind of consolidated. So this is ES, right? This is the 30, 10, 5, and then the same opposite. So 5, 10, 30. If you look really closely, you can actually see them listed at the top of the DOM, but you might have to like zoom in to see it because the contrast's not super high on it on the text. And this thing down here is the dollar. This is the dollar index. It says on the top, this, yeah. And this thing over here is yes. And this thing over here, that's me. So I think I described everything that you see on the screen, right? Not sure to understand. Okay, so one of the things that you want to do here, so we're looking at flow. Yeah, those are bonds. Those are treasuries. So this is the 5, 10, and 30-year treasury. We want to kind of look at correlated instruments. So because I primarily trade the bonds, I want to watch the flow in all three of these things. And I want to keep track of the correlations between them. Because what I'm looking for is if I choose a particular price, right? Is the price that I'm getting at that particular point fair? Well, you should almost always assume if you're using a market order that the price that you're getting is not really in your favor, right? You have to know something beyond that's really going to predict what's going to happen beyond just random, because otherwise that market maker is going to win, right? So when I'm watching the spreads, sometimes I can see movement. So for instance, what I'm seeing right now is steepening, right? The 5-year moved up, the 30-year did not move up as much, okay? So if I saw, for instance, we're steepening, okay? So we saw a downtick, right? Do I want to sell 152.20? You might be able to justify it. Well, they did take it and then it ticked back up. Because why? Because these two ticked down and this one didn't. So they said, well, maybe this one should tick down too, right? So that's kind of why I want to look at correlated instruments, because the way that these robots work, part of the way that these robots look is they say, okay, look at the 10-year treasury, look at the 5-year, look at the Japanese yen, and base my price on what's been happening over there. So if the Japanese yen moves, I probably need to move my price too, right? And that's why we watch those. Should always have some sort of correlated instrument up to help you verify that the prices that you're getting are fair and understand the current context of the market. The same if you're doing ES. If you're really going to trade ES, like dedicated, you probably want to have NQ and YM up. Just I'm not particularly a fan of trading NQ. It's a lot more risk. It's a little crazy, that instrument. But that's how it works. I kind of feel like earlier that you guys are arguing with me just to argue with me, because I still don't see the point behind what you guys are trying or what you're saying. Every order matters, though. Just realize every order has some impact, even though it might be very, very tiny and difficult to measure. Every order has an impact. Of course, we're going to have to look at the larger picture within the time frame. What are the orders going to be doing during the time that we're going to be in the trade? And do we actually have a reason to think that the orders are going to lean a certain way once we get into the trade, right? So I laid out the case as to why I think that we might see some risk on flows today. Those are the pieces of information that we have that I believe would help us predict the future orders, and we'll see if it does today or not. Could end up just being a random choppy day. There's no real economic news. I feel like things are kind of calming down. I guess we'll find out in 20 minutes. No one understands everyone has a theory. It only makes sense to them. Well, but this is the bigger argument that I'm making, right? Don't come up with some theory. I think that everybody's approach is, yeah, come in here, watch the way that the markets move, and form some sort of idea about how markets behave based on, I don't know what, your own observation and your own biases. I don't know. Or we can like do a real scientific study of how the market actually behaves, and we can make conclusions based on how the market actually behaves, right? So when we talk about the inelastic markets hypothesis, this is the latest and I think the most thorough explanation of why markets behave the way that they do. That matches up best with the evidence, right? If we want to think that the markets behave a different way, we need to provide like solid quantitative evidence that is contrary to it, right? People come in for signals, and it's probably the case. That's probably the case. Nobody wants to do the work, right? They just want to hear what Seth thinks about what the market's going to do and maybe try and copy him. Well, not too many people have been trading the micros here today, though. The micro treasury, look at that. 1, 2, 3, 4, 10, 14, 16, 21 contracts through today so far. Nobody's traded the 30. You might actually have an opportunity there to trade the 30 if you want to go long, if we're actually going to see what's coming through, right? I saw yesterday's video about inelastic very well. Good. I really think that that video is probably the most helpful thing that I can possibly share with you. You're gonna watch that video. Everything else that any other guru ever says now, you're gonna look back and be like, yeah, but what you just said doesn't line up with the empirical evidence that we have, right? Your English isn't. Where are you from, Trades? Normally, we usually have a lot of Johns, but you're the only John in here that's spoken so far today. So I think you're okay. Otherwise, we might have to have a battle to the death. Oh, you're from France? Oh, very, very good. Man. So I've just been one of the guys that helped us find this research is Jean-Philippe Bouchard from Capital Fund Management. And I'm just, I really, really like the guy's research and what they're doing over there. And I'm like, I should learn France and go over there. I should learn French and go over there. But I don't know. I find, I think Chinese is such an interesting language to learn. I should spend more time learning Chinese, but I always kind of go in spurts and then I start forgetting about it. Stop doing it. Stop keeping up. That's what I need. I need a Chinese friend. I need a Chinese friend that I can chat with. See, with French, that's not necessary. Yeah, see, here's the problem in France is that everybody in France knows English. they just hate. They just hate when you use it. They want you to learn French. I should learn French. You know what? I should learn lots of things. I think I should learn how to use TensorFlow. That's probably a more useful use of my time. Yeah. When the baby is born and I am on paternity leave, hopefully we'll have a lot of opportunities to spend more time on machine learning. And I'm going through. Can I show you here? I have like here's my notebook. I've been going through probability and stuff. You can see all the work. How many pages? I have like 3 pages of this stuff, right? 3 pages. 3 pages of this stuff. That's just like the work. That's just the questions for 1 chapter. So it's like for me to do all of the questions from 1 chapter is probably like a week's worth of work for me, given the amount of time that I have to work on it. Ugh. We have a long road ahead of ourselves, folks. It's not so difficult to learn French. I think so complex, but our global English level is poor, so we continue to try. Oh, your son began Chinese? Huh. I really think they should teach Chinese in school. I guess that it's too hard to teach in school, like a high school level, maybe. I don't know. Chinese is an interesting language. Okay, now that's interesting. So I'm just hearing over the news squawk. Somebody's saying that even if Russia halts their supplies, that they in France aren't going to have any problems with energy supplies. I'm a little skeptical about that, but that is something that, maybe we won't see. We should keep a close eye on oil here. Oil might get pressured today, right? How does the HFT market makers trades? Can you please explain their edge in the market? Thanks. Okay, sure. So the objective of a market making strategy is to make the spread. So if you go in and you look at their total profit and loss for the day, right? You take their total profit and loss for the day and you divide it by the number of contracts that they used, it should come out to the spread, which in this case, in the 10-year treasury, for instance, is $15, right? They should make on average $15 per trade. Okay. So how do they do that? Well, having the spread is an advantage, right? You get filled here, you get filled here. The other guy always has to hit into you. You're able to select the prices. That's an advantage, right? But if he's hitting into you, there's a reason he's hitting into you, right? He thinks he knows something. So, does he really know something? Well, a pure market maker, of course, if it was me, I would be incorporating informed trading into my strategy, right? But if it's a robot, the robot doesn't know. The robot doesn't know. So what does a robot do? The robot looks at how much order flow is hitting in against him, and it uses that to basically see what is the probability that informed trading is going on, right? If we're starting to get trend and we're starting to see really one-way order flow coming in, then you're going to want to adjust your prices to account for that, right? So what does the market maker do? He pulls his orders. So if we're starting to get trend short here in the treasuries, then the market maker is going to say, oh yeah, I'm not going to offer up as many contracts at that place, or I'll just completely cancel all of my orders at that place, right? It makes it easier to go that direction, right? And then what he will do, he'll wait for there to be other signs that like that informed trading has subsided before he really starts trying to hold bids against it, right? And then on the other side, he might not put as many orders over here. What he's going to do is he's going to widen his spread. He's going to be like, okay, well, I might only have a few orders here close to it, but then further away, I'll have more orders, right? So that when they come back, it will make it so that they'll kind of come back over here, right? So like at 0.95 would kind of be like the spread, right? Like 10.5 would be the edge and 8.5 would be the edge, right? So they'll say, I'll put a bunch of orders. I would love fills at 0.7.5 and 11, but in here it's going to go wildly. It's going to be more free. I'll still take some orders in there, just not as many, right? Right? Informed trades are basically market orders, not necessarily. Informed traders are going to be market orders, but not all market orders are going to be informed. The vast majority of market orders are just going to be random. There's going to be noise. Most of the activity is noise traders. So he's kind of looking at the order flow to try and see, is there more than just noise in there, right? All right. So what will kind of be the tendency then is they'll kind of come back into these little liquidity holes. And then very slowly over time, the market maker will take fills in that area and make his money. Now, there's another thing. Because you do all of that's kind of like, statistically speaking, you should come out to make the spread or whatever, right? But it's probably not enough edge in today's market to really make money. So on top of that, you're probably going to add some other kind of edges. So one thing that you might be able to do is, if you're really fast, you might be able to see really, really short-term signals in price. There are some situations that, in a very, very short time frame, you can predict what's going to happen. A very short time frame. So you might want to factor those into your strategy. Another thing that is really common to factor into your strategy is statistical arbitrage. Watching a correlated instrument and how it tends to behave statistically with that correlated instrument, and setting your best bid and best ask based on what the correlated instrument is doing, right? So here in the treasuries, correlated instruments that we can use the other treasuries, we can use the Japanese yen, we can use the dollar index, and we can use the S&P 500. These are all things that we could factor into like what the correct price is right now. And this is generally how market making works. Can you, a retail trader, do market making? Maybe. You're going to have to take on a lot of risk to do market making, because the part of his advantage is taking on the risk. If you only have one contract, then doing what I just talked about is kind of hard, isn't it? Because a lot of it is based on taking a lot of contracts, and over time you're just getting that spread, right? If you only have one contract, you can't really do that. You kind of have to know which direction it's going to go, right? Plus, it's really hard for you to get a good spot in the queue. That's another big advantage, is you want to be the kind of guy that, like in this situation, if you had bids and asks out at 9.5 and 10, that you would have got filled on both sides because you were at the beginning of the queue. You don't want to be the guy that's at the end of the queue that when you do get filled, it's because it ticked through you, right? You want to be the one that you got the fills and then they never went through you, right? If you're already always first in line, there's always at least one contract that goes through on each side, right? And that's how we can talk about market making. If you're interested more in that, they talk about how market making is profitable quite a lot in the book Trades, Quotes, and Prices, Markets Under the Microscope. There's some really advanced math behind how market making can be profitable. That is way beyond going into on the stream. And I would probably have to prepare myself to show you how to derive them and stuff. But if you wanted to get into market making, here's what I would do. I would go read that book, and then I would go and write a market making robot based off of everything that's in that book. Yeah. Well, there was a pretty big iceberg at 09.5. They did go through him and keep it offered, though. The 5 years still kind of looks like they want to push up. Not really seeing too much happening in the 30-year. We've still got about 7 minutes until the S&P 500 opens up. President Biden has interviewed 3 separate people for the Supreme Court. Interesting. Oh my. Global Times News on Taiwan. Taiwan is eager to grab attention from the Ukraine issue, but there is no dispute over Ukraine's sovereignty despite disputes on its borders. Taiwan's sovereignty has never existed. It is only a matter of time that your sectionalist regime will be eradicated. Okay. I recognize Taiwan as an independent nation, but whatever. Man, that's some of the strongest language I think I've seen coming out of the Chinese regime. Maybe I'm just not paying attention. Apparently some children have died in Donbass. What were we talking about before we got into the market making thing? We were talking about learning French, weren't we? Yeah. There's no shortage in supply chain issues. Well, as it relates to oil, because we were talking about oil, oil, it's beyond just the supply chain issues, right? The countries just have not invested as much into oil production as they should have. And the OPEC countries seem to be like content to let the current things happen the way that they are. This was again where it was like when it was Donald Trump, he had done so much for the Saudis that they basically were nice to them on oil policy. And Biden has done the exact opposite. And so it always comes into, well, we'll just keep prices high. What is the best spot to enter a trade where my target is a point of control and should be my stop loss on that trade? Can you help me structure this type of a trade? Okay, so the best spot to enter a trade where the target is the point of control would be at the point of control. No, just kidding. Obviously, the closer you are to it, the more likely it is to get touched, right? But here's how you got to think about this, right? All other things being equal, your price movement is going to be mostly random. Okay, so the first thing that I might want to consider is like, what is the noise level of that instrument? Right now in the treasury, it's about 4 or 5 ticks, right? So if I wanted to get to take a trade on it coming back to 09.5, probably the furthest away that I would be willing to take it is like 11.5. That's just based on noise, right? Now here's the question. If I think that some sort of large meta order is going to be executed today, that is going to be a risk on trade, that is going to move the treasuries down, why would I care what the VWAP is? Why would I care what the VWAP is? That's right, I don't. I don't give a shit. Because here's what's going to happen. The orders are going to move the market, and they don't care what the point of control is. They don't care what the VWAP is. Well, I mean, they kind of do actually care what the VWAP is, but they're going to go through that. They don't care where the low of the day is. All they care is that I need to sell a certain number of contracts, and I'm going to keep selling until I've sold them all, right? So trying to pick a price ahead of time that I think it's going to go to doesn't really make sense unless like I know how many orders are going to be executed. But then at that point, what I should be doing is I'm saying, okay, based on how many orders are going to be executed, this is how far they're going to get, right? But you don't even need to do that. You can actually kind of see if a meta order is being executed, we start to get a trend, and you'll see when they back off. You'll see like a large amount of transactions happen at a spot, and a liquidity hole form, and that leg will be done. And then you kind of wait to see if there's another, like POC means the point of control, the highest volume price for the session. So it's that orange price you see on the volume profile there, 126.09.5. That's the most traded price today so far. Okay, so the way that I would kind of try and do it though, or is I would prefer to have a stop that is beyond what the natural noise of the market is, right? So I could maybe try and do a random trade and say I'm going to take the 4 ticks here. So what, that 1, 2, 3, 4. So I could sell 11.5, and I could have my stop be 1, 2, 3, 4, 13.5 away, right? That would give me equal risk reward. And just hopefully with just the regular oscillations of the markets, it will go and hit 09.5. And if I have some reason to think that generally overall we're going to be sell during the time which I take the trade, then I'll probably have a pretty good chance of hitting 09.5. It's just that what's going to happen is when you're wrong, you're going to be wrong over and over and over and over again, right? You're going to get a trend and it's going to go against you. So, but I guess what I'm getting at is that kind of, do you see how the usual approach that I think people want to take, where we say, I think that we're going to go to this price and I want to put this much in my stop. It doesn't really make sense once we understand how markets move price. What we should really be doing is we should be saying, I think there's going to be a meta order that is going to cause a trend down today in the treasuries, for instance, right? We're going to get a trend down. The current price is 126.10. We're getting a certain amount of noise within the range. So like 10.5 is an okay spot to go short. And what am I seeing in the other instruments? Okay. Well, this seems like this is in line, and I think that I might be able to get a short at 10 half. So sure, I could put a limit order at 10 half, right? And then my stop is going to be more than just the noise of the market. So it's going to be like 5 or 6 ticks, right? And then I'm expecting to see a trend down. Now, if I don't see that, so the S&P 500 has opened. If by 7:45 here, I'm not seeing the risk on get put in and we're just still kind of getting random meandering, then maybe the trade is a bad trade because we're not getting the confirming order flow. We're not seeing the short meta orders coming into the treasuries that we wanted to see, right? It invalidates the trade. You don't think technical levels can bring enough order flow to move markets? So markets can react to certain levels, but I have spent a lot of time backtesting these levels, and the way that markets behave in relation to them is not very consistent at all. And I would not recommend basing your trade off of that. The entire idea of like, well, okay, so for instance, there's a stat that we will touch the previous day's point of control like 60% of the time or something like that. So the technical analysis way of thinking about things is, oh, okay, so I'm going to say the point of control, yesterday's point of control is above us. So I'm going to buy and I'm going to take it off when we get to yesterday's point of control, right? That's a trade. And supposedly that should happen 60% of the time. Well, the reason that that happens 60% of the time is just because of the volatility of the market. Like the volatility of the market is this much. And so you're likely going to be within this far of the previous day. And ergo, there's a pretty good chance that you're going to touch the previous day's point of control. Doesn't necessarily mean that there's anything special about that yesterday's point of control. And here's the problem is how much is it going to go against you before it gets to that point of control? Right? Well, once you realize that action that takes it to the point of control is mostly just the noise of the market, the natural volatility of the market, then how are you going to have a spot that like holds a risk for you? That's going to hold your risk parameters for you, right? Because it could easily go just as much against you as it is going to go in your favor at that point. Like why should it if yesterday's point of control is 5 S&P 500 points up, then it's just as likely that it's going to go 5 S&P 500 points against me. And guess what? That's $100 on a micro contract, right? So, oh, actually, it's not $100. It's 20. It's $25. Huh? Anyways, I'm just that's kind of how once you really get into the stats, how it kind of turns out. So even though you might detect some kind of statistical aberration in the market from these levels, doesn't necessarily mean that you have a good trade based off of it, right? In order to really know that we have a good trade off of it, we would have to say, okay, here is the situation. Here's my stop and target, and go and systematically test it over a really large data set. And if I can get like 10,000 over 10,000 trades, there's some sort of an edge off of it that is greater than just like the error, beyond statistical error, then maybe you have a trade. But that like almost never happens, right? What causes the noise? Is it the stupid people trying to play? I think so, yeah. Well, under the models that we have, what causes that noise is the noise traders, yeah. Uninformed traders, they think that they know what's going to happen, but they really don't, and their order flow basically ends up being random. Right? So here's the thing. What's going to cause the market to do what I want to do, right? What is it that's going to make it so that if I take a trade here, if I go short 09 half, that it's going to go and touch my target before it's going to go and touch my stop? What is something that could force that to happen? Well, we know that orders move markets, right? We know that orders move markets. So we would have to have future orders coming in short, essentially, right? The combination of limit buy orders, limit sell orders, market buy, and market sell orders, the combination of all of those leads to market moving down. That's what we need to do, is we need to predict those orders. How can we actually predict those orders? So is a technical level able to predict those orders? Well, it does seem to me that the markets can react to those kinds of levels, right? But I'm telling you what, it's not nearly as important as there was a headline that just changed everybody's expectations of the future, or there's a fund that needs to allocate its shares for the month, or that sort of a thing, right? That's the sort of a thing that can really predict the future orders, right? So that's why a trade that is premised almost entirely on technical levels tends not to result in profitable trading. You need to realize that's what everybody's trying to do, right? That's like what 90% of traders in the futures trading space is trying to do, is look at levels, whether it's a volume profile level or the high or low of the day or whatever the deal is, all of those things, and they're trying to trade off of that. And guess what? 95% of them lose money. So why is that? Well, now we know why. Because orders move markets, and the markets are very inelastic. And if there is like a fund or something that's going to come in and move the markets, they're going to move the markets really far, and there might be no rhyme or reason to what they're going to do. Like there's no they're not doing it because of a change in fundamentals or because the price is too low or too high or there's no informational content behind it, right? But if you know that those orders are going to come through, and there are some cases that you can know, then you can front run them and you can make money, right? You can predict where the market's going to go if you know that future orders are coming. Sometimes you really, really know. Sometimes, like today, you kind of think that you might know, but it's a little uncertain. Today is a little bit more speculative of a day. So far, though, we're coming up. We've been trading now for about 18 minutes now. S&P 500 hasn't really done too much of anything interesting yet. Okay, so I would argue that it's just as hard to predict market direction with news releases, and you can take, so one is that if we correctly understand how orders move markets, we should be able to predict which way the market is going to go based on the news. But we generally are going to have to know more than just the news. We're also going to have to know what the current market positioning is and what people's expectations were, how people's expectations changed, and how it affected already existing positions, right? So that's the first thing. The second thing is that you could take a trade based on a piece of information that you have. For instance, let's not even do news. I think an even better example of this would be the price is bad. For instance, I think I can pretty confidently say that Tesla was overvalued last year for most of the year. In fact, it probably is still overvalued, right? The forward PE multiples that they were trading were just absolutely ridiculous. Okay. So I can know that Tesla is overvalued, but that doesn't mean that if I go short term, I'm going to make money, right? What do I need? I need the orders to come in. There needs to be some sort of impetus to create the orders. And sometimes you might have a piece of information and it just doesn't lead to orders, or it doesn't lead to very many orders, right? So those are kind of some difficulties that you have to sort out. But what you are correct about is that an informational edge is probably going to be more difficult for you to take advantage of, right? Your hit rate on those is probably going to be more like 50-50, unless you're like really understand that market really well at that time. And you're going to go through periods where you really understand that market, and you're going to go through periods where you don't really understand that market. So it's not going to be very consistent, right? Whereas if you have an edge, and let's not call it technical, because I think the whole idea of technical analysis, it's like there's the ideas that were behind technical analysis, and to me, technical analysis is the idea that markets are informationally efficient, but that there are still patterns that we can take advantage of, and everything that we know says that that's not true. So let's say quantitative. If we have something that's purely quantitative and is based really purely just on watching that one instrument, right? If we find an edge in that, a real quantitative edge, we've done all our homework and we've really found that there is an edge that cannot just be random noise, that we're not being fooled by randomness, then that should be more consistent, right? But that's going to be much harder to find as well. So that's the trade-off that you're making, right? You can get the consistency, but it's going to be something that's going to be almost impossible to find. Or you can have something that is not very consistent, but the edge is just available freaking everywhere, right? Because there's a lot of informational inefficiency in markets. Like you can see here, this trade finally appears to be going my way. We haven't broken the lows yet at 07, but we have made enough that I could take a trade off, and it did go max 7 ticks against me. Oh, actually, it did at one point go 10 ticks against me. So, okay, but here I've been telling you guys all morning what I think is going to happen, right? So if I knew that, and if that's really is why it's moving the way that it is, why was it that it took a whole 2 hours for it to happen? Well, I'll tell you why. Because markets are not informationally efficient. When the market is very bullish, it can give you a false sense of security. Technical analysis works. Well, this year should be an eye-opener. Yeah, really does. Well, I mean, the biggest thing that you see during a bull market is if you buy, you're likely to make money, you know? And that's what most retail traders are prone to do, is to buy something and they make money and then they think they're a genius until the market changes. But the other thing I kind of forgot, I'm a little ADHD and I'm trying to share like these really big ideas, and sometimes I get lost in the weeds a little bit. But here's the other thing: the quantitative edge. I'm going to say it's nearly impossible to find a quantitative edge just from looking at a single price time series. Okay, so if you have your regular old chart, whether it's a 1 minute, 5 minute, whatever, on the S&P 500, okay, almost there's an infinite amount of analysis that you can do on that. Okay, your ability to find a true quantitative edge on an intraday time frame with just that one data series is practically zilch. It's practically zero. I'm from what we understand about the way that the market works, if you're just looking at price, it's never going to be enough for you to really become profitable from a quantitative perspective. You're going to need to incorporate other data series. So one other data series that you could do could be a correlated instrument, right? You could do a correlated instrument and you could try and do statistical arbitrage. You can add order flow into it. Order flow, there are definitely signals. Once you look at order flow, there are definitely signals on very, very short time frames that can bring edge. Those are, we're not competitive on those, but if there's ones on very, very short term time frames, it is conceivable that there might be some patterns that you can pick up on longer time frames that you might be able to take advantage of, right? Or we can combine everything that we know. We can use what we know about the order flow. And yeah, we can even factor in levels. I find levels to be really useful as just like a benchmark. Like I remember there I was saying, well, we're having a pretty good push down, but we haven't broken the low yet. That was just that because that was my benchmark. Because I knew, like, oh, if we're really getting a good strong trend, we're probably going to go below that, right? And then we use what we know about the market and people's positioning and people's sentiment and what they believe about the future and the fundamentals and every little piece of information that we can find and combine that together, right? Now we're much, much, much more likely to be able to sort out a reliable edge in that situation. But what most retail traders do is they come in and they say, okay, I'm going to use dojis because somebody on the internet said that it worked for them. And then they lose money and they're like, why doesn't it work? Hmm. You didn't take any trades today, NASDAQ killer? Well, it came back a little bit there. That was a pretty strong move. That pullback was pretty good. Do you think that 2% is in the cards for the day? And they're not very far away. Say it was flaccid. Well, the S&P is, so it's really interesting to me. We saw a pretty big move there in rates. It wasn't a huge move, but we saw a pretty good move there in rates. But the S&P 500 is still constrained. I mean, it's at a better level than it was yesterday, but we really haven't gotten the buy-in today yet, have we? So I'm wondering, does this require some adjustments by us? Well, I'm more concerned about what the Treasury is doing, but the fact that the S&P 500 hasn't really turned risk on yet is a concern to me. What do you think of price action? So price action is, again, technical analysis by another name. It's kind of this assumption that, well, maybe it's not. So the first thing, the big warning sign is the assumption that the current price reflects all available information. Okay, if somebody comes in and they say anything to that effect, just ignore everything else that they say, because it's been proven false. Markets are not informationally efficient. Markets are very statistically efficient on short time frames, but they are not informationally efficient on long time frames. Make sense? And why is that? Because orders have such a dramatic effect on price. Orders that are just random can have a really dramatic effect on price and move it very far away from what the fundamental value is. But then on the other side, if you're trading a statistical inefficiency that you've seen, you trading it can remove that edge from the market very, very easily. And that's why markets are more statistically efficient than they are informationally efficient, right? So when it comes to price action, as far as I can tell, it kind of has the same problems as traditional technical analysis. They might not necessarily be using the assumption that current price reflects all available information. But what they are doing is they're saying, I can use movements in price to predict what's going to happen in the future. And they don't quantitatively test these setups at all. There are ways to do it. So I got to tell you, you guys that are interested in price action, here's the thing that you got to look at, okay? Zigzag. You go into NinjaTrader 8, there's an indicator that is built into NinjaTrader called Zigzag. There are also some more advanced versions of it out there called like price action swing, etc., etc. You probably would want to change the indicator a little bit, because what you got to do is you got to say, okay, at what point can I confirm that there has been a pivot and I can take a trade? Okay. Once you've defined that, at what point can I say that there's been a pivot and I can take a trade? Now you can backtest all price action setups. Have you ever seen a price action setup backtested in the statistics and stuff of it? Because I haven't. The most I've ever seen is that they take on more risk than they make. Like their stop is twice as far away as their target, and that's how they're tricking people into thinking it works. You think that we could see a gap fill on the S&P? It's not unreasonable. I mean, that is something that tends to happen. So, as I was saying earlier, the scenario that I wanted to see for the Treasury is playing out. But, oh, by the way, I think, well, I might need to think of taking it off at 2. But let's just kind of see here. I'm still getting some pretty strong selling order flow. So, okay. We got what we wanted in the Treasury. We didn't get what we wanted in the S&P 500. So, is the S&P 500 falling because the interest rate rose, or is it something else? I'm not sure, but either way, the fact that so far in the first 20 minutes of the S&P 500, they have been selling is a concern to me. That is not in line with what I expected to see for my order flow today, right? What are your thoughts about cycle analysis? Oh, yes. That's actually that one's actually interesting. So what I have found is if you have some sort of um Fourier series analysis sort of a thing that tries to figure out like what the current oscillations of the market are, and you utilize that in a strategy, it does tend to help. So if I take like, let's just take like a random something that we know doesn't work very well, like a MACD. So like if I come in and I do a traditional MACD crossover strategy, right? It's going to come out, it's not going to make money. And then if I add a Fourier series analysis on it, so I say, well, when I get the crossover in the MACD, I want to take it, but not until my cycle analysis says that we're at the low of that cycle. That does tend to help the profitability of that strategy. So what I would say is that those oscillations can help. I would not base my entire strategy off of that, but it does appear like that sort of thing can help from the study that I've done. But that's probably not statistically thorough. Just note that the amount of data that I have is limited. What is your trading style, quantitative, fundamental? I try and utilize both, right? So what happened? What I'm doing is I'm using what we know about the market quantitatively to try and trade more of a fundamental. But I wouldn't call it fundamental, okay? Because fundamental is only one part of the pieces of information that we could trade. And when I take a trade on fundamentals, I'm not actually trading the fundamentals. What I'm trading is changes in people's beliefs about fundamentals. Okay. And if you want to know what are some of the other things, what we call determinants of order flow that I look for, or at least some ideas about some determinants of order flow, they're not the only ones that I use. Watch my most recent video on the YouTube channel, the inelastic markets hypothesis. Inelastic markets hypothesis. We talk about why that is. And what we're doing is we're using a quantitative study of the market about how markets behave to try and base our strategy, but it's still very discretionary, right? And I very much do not use what the current price is something that I actively avoid using. Has Philip ever talked about the fact that the more people, so that's not something that I've ever seen in any of his books per se. But one thing that we will see though is there is the inverse sine law, right? You should always keep that one in mind. If we have a move one way and then we retrace back over it, and you've got strong meta orders coming on both sides of those, the second one that's going the opposite way is going to have more impact because of what the first order did to the order book. And that might be why you see some of this stuff that you tend to see when you're talking about, the more that people are wrong on a price point, the more price seems to steamroll them. But at the same time, when you're really seeing like a steamroller, I think that that has more to do with that you've got a really big consistent um meta order coming through, you know? Okay, so let's say the S&P 500 rose by 1% today, meaning there are a lot of buying orders moving the price up. Then is it safe to assume they will continue? No, it's not. It's never is. Never is. So this is where the things kind of get interesting, is that what matters is what the future orders are. And I can come in and I can say there is going to be some order flow that's going to come in here that is likely to make interest rates rise, right? I was able to correctly predict that order flow, right? But I don't know how many orders there are behind it. So it's very difficult for me to predict how far it's going to go. I don't know if this move that we had here this morning in the treasury, if that's it. That's it, and 2.002 is going to be the high of the day. I don't know, because I don't know how many orders are actually going to come through, right? But if you really start to study it quantitatively, and I know that when I worked at Goldman that they did this sort of a thing, then they have some idea of how many orders are going to come in, right? So that's how I would know. Is I was like, okay, we expect to see this order flow come in. We started to see that order flow come in. I know that this is how much we're supposed to see, and they've only traded a quarter of that. So we're going to continue to see price move, right? That would be the way that you would want to do that sort of a thing. Hence, we should buy then. But there are ways of predicting future order flow. I'm just saying that what the current price is not very predictive of that. Changes in price are not very predictive of that. Very unreliable. Otherwise, everybody retail trader would already be making money, right? What I think you got to do if you're going to make money is you've got to be able to capitalize on information that other people aren't, right? Well, the S&P 500 is kind of probing the overnight lows here at around, let's say 43.10. They've kind of tested it. They've backed off. We'll see if they come off here or not. So far this looks like, a test on one side. They might try and test on the upside, flip back around. But one news headline that I haven't mentioned to you guys that I am seeing come through on Twitter is that there are Ukrainian government websites under cyber attack. So that is a bad sign for continued, because that's the one thing that could really, really screw up this trade, right? Is further action in Russia. Are you saying no one can make money by only using a chart? I mean, that's a difficult thing to prove, right? And the problem is that you're probably going to find at least one person that has. But yeah, I'm saying that trying to just look at one chart, probably wasting your time. Would you go long on bonds for a long-term board? Well, that's kind of what I'm thinking about right now, John Ball. No, it's not financial advice. I can only just give you my current opinion on analysis of the markets. Once I start giving you advice specific to you, like I think you should take this trade, I think you should do this investment or that, then we're crossing the line into giving financial advice, and we shouldn't do that. That is a bad sign. Well, it is a bad sign so far. It's not good. It's not looking good. So I'm kind of in a difficult situation here, because I've gotten very confirming order flow in one instrument and very non-confirming in order flow in another instrument. I'm not really necessarily seeing any reason for this order flow in this instrument to be happening. I think that the S&P 500 still seems kind of a little bit negative sentiment. If that's the case, I might be willing to sit through their, I might be willing to just sit here and let them work it out. And because I think that in the end, assuming there's not some headline that I'm not aware of, I think that in the end they'll probably come to the same conclusion I am right now. Where do you think it will finish by the end of the year? Oh man, I can't predict that. I can't. Don't tell me what to do. I'm gonna hold it. Or are you talking about the ES? The sim. That one I'm planning on holding that till like next week, essentially. You don't think that the Fed will raise rates as much as analysts think? Well, you might be right about that, Alex. I do kind of wonder, is the Federal Reserve going to raise rates 5 times this year? I'm not so sure. But I also think that 2% is the correct price when they raise rates in March. Like, we should be at a roughly 2% in March. So I don't think that they're too far. Yeah, Macro Voices. Yeah, I've watched that. I have that bookmarked. I don't check them out that often, but they do have good information. TLT has been going down, so maybe a good entry. I think that anything below 2% is probably a fair price. I'm kind of making a more fundamental assessment of like what is the fair price in the S&P 500, right? But for this one over here in ES, like I intend on holding that till like next week. So this is kind of more of an experiment, which is the how do we say this? The bet that I'm trying to test here is that the S&P 500 will be above 4,300 in a week. So we just relax on that. Now here in the Treasury, we are kind of getting some indications that move is over. But I think that the price that I got was a really good price. Like that's one that I think I should be able to let ride. Gold. Yeah, gold is well, okay, now oil is doing stuff, moving back up. So I think that the market is reacting to this cyber attack headline. That's kind of what it looks like to me. Did you see News Squawk say something about an invasion in 48 hours? I didn't see anything like that. I haven't seen anything like that. Let's just come over here to Zero Hedge, see if we've got, we're missing something. The way that the oil is moving there, definitely, though, that's the thing that really makes me go, okay, there must be something else going on here, right? Jeez. No, I don't see anything there. Market moved right off the news. You talking about the cyber attacks headline? I mean, I've been seeing that headline for a while before the market started to react to it. So that one's, from a more fundamental perspective, is their attacks on Ukrainian websites at this moment a real concern for there will be more war? I'm not so sure about that. I think that that's something that could continue to happen, regardless of whether or not Russia had imminent plans to attack Kiev or anything like that. So I don't know if that really helps us. But what we should note is that the market is reacting to it, right? The headline does appear to be changing the market's expectations of the future. But we'll see if they can work something out. They didn't touch 4,300 yet. 4,300 is a quote unquote key level because of options. So because of people's positioning, that could. Newsbot, U.S. warns of Ukraine full-scale invasion within 48 hours via Newsweek, citing a U.S. official. None of my news squawks have picked up on that. 10:02. So you're saying 4 minutes ago. Just try and Yeah, Ukraine website's getting attacked can't be it. They've been getting those for a while. Yeah, exactly. See, Live Action posted a headline there. It's not from a source that I recognize. So I think that we should keep that in the bucket of rumor, but we should be investigating, trying to find it. Okay, now I see it on First Squawk. So I am. Okay. So let's come to here and manage this one and puke this trade here for now. We'll let it sort out here for a little bit. Does that mean that we have to be like in risk off mode again for the next 2 days? Darn, I don't like that. I'll do that. I'll get that right there. Okay. I want to get something. I didn't get the 126 even that I wanted, but I want to get something out of that leg. We're still doing really good on our CTA strategy. Yeah. I'm not sure. So it's interesting to me here though. Oil definitely reacted. Gold was front running it. Gold has been up all morning, right? Oil definitely started to move here the last 10 minutes. S&P 500 has been. The treasuries haven't reacted to it as strongly. Given the piece of news that we just got, if it's true, and I think that we should still kind of put it in, it's a confirmed headline that the U.S. is warning about a more full-scale invasion. But I hate to say this, but given the way that this is sorted out so far, we shouldn't take that kind of a headline for granted, right? Or which is to say, I don't think that I want to put my money at risk on whether or not that's actually going to happen, right? But it's really interesting to me the way that the Treasury moved. Did I just get insider traded live? I think that in that particular situation, there was significant piece of information that was changing the market's expectation that I was late on, yes. But our other edges had done so well for us that at least on the live trade, I still made a good amount of money. I'm actually, like I should have taken, I really wanted to take it off. So when it came up here to 2%, I saw it go through it and then come back. And then once it was like here, I was like, no, I do want to take it off, but I don't know if I'll get filled. I'm not going to put it on there until it gets, and then it never kind of did. So then I started to go, okay, so I missed that low swing, but we are kind of getting this rebalancing. Let's see if it comes back, right? But then at that point, it started to become clear that something was wrong. EU will hold emergency summit on Thursday. What's this right here? 10 rows. CPI outlook suggests only small tightening needed. Okay. Okay. Yeah. The news story is a Newsweek exclusive. U.S. warns Ukraine of full-scale Russian invasion within 48 hours. Oh yeah, Alex. No, Biden yesterday's was a really interesting one. I wish I had the balls to trade that. I think that I'm still in when it comes to anything Ukraine. Just what happened to us is a really good example here, right? I'm not the first person in line to understand that stuff. I was able to go through and I was able to list out to you, there's all of these bullish things for Wednesday, right? And what's the one risk that we have? The Ukraine headlines. And the Ukraine headlines, we're not very good at either being the first people to know about it or to really understand what's going to happen when we do get the headlines. Because even now, there's this Newsweek story that Russia is going to attack within the next 48 hours. I'm not willing to put money down on whether they will or not. Okay, so should we do a poll here on this one? About 8 o'clock is when I like to do the polls. Will Russia... What is the exact... Will Russia... full-scale invasion of Ukraine happen in 48 hours? Yes, no. Do you believe the headline that's hitting the market here? I'm seeing a little bit of a recovery there in the S&P 500 coming up above 4,300, but if there really is a full-scale invasion of Ukraine, then I think the S&P 500 could potentially break 4,200, right? This is an interesting flows coming through here. So what I'm seeing here in the Treasury now is kind of like what would we say, like self-excitation. Because it moved, now we're starting to get just a lot more activity in general, and I'm seeing spurts kind of both ways, which is kind of a warning to me that unless I already have a really secure position, I don't necessarily want to take a trade here. You could play the long game. Like I think that, well, it's so hard to game out. Like if Russia invades, here's the thing: if Russia invades Ukraine, then what I think we should see happen is more strict sanctions placed on Russia. But I still don't think that the West would actually get involved. I don't think that Biden is willing to put boots on the ground in Ukraine, right? So I think that you could see economic impacts, continue for quite some time. I know there's been a lot of, well, let me start over. Can I start over here? How are we doing, by the way? Okay, I got the poll going. What about share vision? Cool. Good. We're good on share vision. Okay. One of the pieces of analysis that I have seen a lot lately is that historically, when there is a war, quote unquote, and they're like comparing this to like World War II and that sort of a thing, that the market bottoms out like just before the war actually starts, and then it goes further. I don't think that that's necessarily the case here in Ukraine because um, this is going to be very economic. Like, I don't think that the United States is going to get involved. Maybe they do. If they get involved, then this could get really scary. But there's definitely going to be economic impacts because if they do a full scale invasion of Ukraine, they are going to cut Russia off from the global economy. That's going to have an impact on the global economy. That's not good, right? So I don't necessarily want to be, if there's a full scale of an invasion of Ukraine, I'm not so sure that I want to be long at this moment. You know what I mean? So that's the determination that I'm making, is that as long as I'm getting market moving Ukraine headlines, I want to be out. And with the way that all went through, I think I should just consider myself lucky. Well, it's not even lucky. You know what? I had a good edge. Like, we got a lot out of that initial trade. I really wish that I had just said my target is 2 and I'll take it off at 2. But I was kind of starting to think, hey, this could run this. If the scenario that I was looking to happen, it would be something that could continue to run. By the time that I realized maybe something was up and it would be wise to take profits, it was a little bit too late. But because I got so much out of it to begin with, I still walked away with a profit that I'm really happy with. $15 for me is still an average day. So 30 would have been amazing, but it's okay. And we're on a pretty good win streak too. We had such a terrible losing streak. And now we're in a good streak. Like, at one point we were at $500 and now we're at 621 in the account. So, and we've paid for the data fees for the month, which is very important. Though I would prefer that after the data fees come through that we're still above 600. I don't know if that's going to happen. I'm a little frustrated here in the treasury. One thing that I'm thinking about is, well, I could try using a little bit of the risk that I've gained here today to try and play this, but the treasuries aren't really reacting to it the way that you would think, are they? So, and that may be because the treasuries are still kind of thinking that, there's still the inflationary pressures. That might be the case. So it may be that when we're getting these risk-off headlines about Ukraine, that treasuries is just not a good place to play. That it makes way more sense to try and play like oil and gold, right? I think so. Well, I'm hoping my regular portfolio should be looking pretty nice with gold and silver up. I don't want to go and look right now. No, it's not too bad today. But what's carrying the weight? Oh, okay. Well, my portfolio just hasn't moved very much today. But we are doing pretty okay on the silver. Yeah. Well, I was thinking back to when who was it? Live Action was like getting a little freaked out. Wow. I wish we had gotten that link when you came through. Oh, via Newsweek, you did say there at 10:02. So hold up. If we come back here, you got the news we had the news at 10:02, and I got out at 10:08. So there was about 6 minutes there that I was living in denial. So the question is, how can we sort out that that really is the headline so we can get out of it faster. What do you think? I'm a little frustrated that my news squawks were slow on that. Ten-year has not had the usual risk-off correlation this week. Last week was a different story, though. Yeah, last week it was like anytime that the headline came out, they like really, really bought it, huh? News Squawk had that? Oh, well, but they didn't post that on Twitter. They didn't post that on Twitter, though. So what I was saying on that. Oops. Why is it doing that? Oh, well, whatever. So if I come in here to, yeah, okay, so, hold on. Okay, so when I look at Financial Juice, I was getting hints of it at 802. Here, I'll just show you here. So this circle one, that is actual Financial Juice, and the rest of this is just like other people on Twitter and stuff. So here, FX Street, that's maybe one that we could add to our list. FX Street was doing it at 802. Here, Financial Juice, they're still talking about DOS attacks, right? DOS attacks, blah, 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 blah. Biden. And then here is Forex Live. Now, Forex Live is on that. Yeah, okay. US warrants, that's when I got it. That's when I got it. Right? And then here, I don't think I don't even see it on the list here, but I did hear about it. After that, I did hear about it on Financial Juice. So, but you know what? I've always said News Squawk is a better service. It's too expensive for me. A friend of mine, order book trader, said that when you get you know what? I totally understand the thinking behind that, and I've tried doing that myself. And usually when I try doing that myself, I just get slaughtered both ways, actually. This one might have been a situation where we could have flipped around, right? Because we got out at a 90. So we could have made our $20 back here. Wouldn't have been too bad. And we could still be holding it. Like I think at this point, I don't know if this will continue, but I doubt that they're going to come back up to 2. I doubt we see 2 again today. So it was probably safe to hold it short. I'm not so sure I want to play that game though. Like I need to understand or accept that when it comes to what's going to happen with Ukraine, I don't necessarily have a very good edge. When we were looking at it yesterday, well, we got 14 votes on the poll, and 71% of you say no, you don't think that there will be a full-scale invasion of Ukraine within the next 48 hours, despite the headline. So the majority of you don't believe the headline still. See, when it was yesterday we were talking about this, I was saying, well, it looks like things could calm off, and right now we're not getting any kind of indication that it's going to escalate. That doesn't mean that it's not going to escalate. It just means we don't have anything that suggests that it should. Now we do, which is a U.S. Newsweek reporting that the U.S. says that there's going to be a full-scale invasion. The problem with that, though, is I don't know if that's very reliable. So what does that mean for me in my trading? Well, we could go short rates. We could have, but I think that the wiser decision for Seth is to acknowledge that I don't have a very good edge on this particular issue and to just kind of sit back, right? You're curious why? Actually, that's a really good question. In fact, on the move up, if anything, the liquidity has increased on the move up. I kind of have to wonder, have you noticed? So here's something else I've been noticing. Anytime that 10-year yield gets above 2%, it's like a headline magically appears. Right? This is like the 4th time now. Isn't it? This is like the 4th time. Every time the 10-year gets above 2%, a headline magically appears. But you know what? 48 hours isn't too long to wait. And we should probably assume that, if we say that it's going to happen, then Russia is going to like delay it by a day or two just to make us be wrong. Right? But we can pick this up next Monday. That's fine. And you know what? We have something much more important to worry about. You know what that is? We have something very important that we have to worry about between now and then. Yeah. It's that I'm getting a puppy. Ta-da! You guys want to do another poll on the puppy? I was a little surprised. You guys seemed to be leaning towards cash yesterday. My daughters really don't like cash. They really don't like cash. The polling was kind of starting to get a little bit more random, let's say. Oh yeah, we were gonna add Rex in there. Cash or money. That would be cool because then when I'm calling the dog, I could be like money. Huh? That would be fun. Okay, no, we'll put 4 on here. I'm gonna put on Nostradamus, Gizmo, Cash, and Rex. Hi, Bandit and Percy were all rejected. Yep. Ask your community. There we go. I'm really surprised that you guys, after all of that, the stream is still thoroughly convinced that a Ukraine invasion is not going to happen. At the beginning of today, I was feeling like pretty good, like we could be risk on. Now I'm not. Right? By the way, on that trade, on the treasury, okay, negative 1518. That's actually perfectly fine. I'm okay with that. We're good. We're all good. There's certainly room for improvement in all of that. We've really got to work out. Okay, so what I was going to say, one of the things that we were doing there was saying FX Street. Because they had it. So we'll follow them and we will add them to our squawk list. Okay. I don't know if you remember, but I definitely remember back in 2019, whenever the 2 and 10-year curve was flirting with point 2. Okay, so I don't know, I don't look at the 2 10-year curve in terms of like what the actual number is. So I don't know exactly what points that was, but headline regarding the China deal would hit, and then it shifted to 0.15 and then to 1. Well, what I definitely do remember during that whole, and this I think is some of the experience that's kind of having me behave the way that I am, is like the one that I remember the worst was the one that the deal was a done deal. Like it really actually happened that there was a China deal. And I had an awesome trade. I caught an awesome trade on it running. And then it came all the way back because the traders said that the deal was fake. The traders said the deal was fake. And that was Friday. So it was like, well, I'm not going to hold this through the weekend. But then in the end, the deal was the real deal. So we got screwed out of that trade. And I really think that was kind of like, I feel like that was market manipulation. Like there was somebody was in a losing trade and they basically started spreading misinformation about the deal being fake. That's kind of what I think happened. I remember that. That sort of thing happen all the time, but and I'm sure it's going to happen to us with Ukraine a lot. It's just, I'm not an insider. I need somebody in the White House or I need somebody in that chain of command to be like, hey, Seth, yeah, heads up. Like, I need to, if you're an insider, let me know on Discord. I would greatly, of course, we'll keep your identity anonymous. And when you share something with me, I'm not going to be like, oh, I just got a message. I'm just going to kind of be quiet about it and do something. And, so if you are an insider, let me know. Don't share with me anything that you can't legally share, of course. But if Newsweek knew, then you can certainly tell me. I think you can. If you can tell Newsweek, you can tell me, right? Is that, I don't know. What are the laws around that? Did Nancy trade? If Nancy traded on it, then I can trade on it, right? You know what though? I saw this thing the other day. They're like, well, I'm not selling because Nancy Pelosi hasn't sold. And I'm like, I don't think Nancy Pelosi really knows much about what's going on in Ukraine, so she's not going to be a good indicator. Oh, Salimi did end up taking a trade? No, you didn't take any trades today. You still didn't take any trades today. Are you still there? You gonna trade it now that we're having all sorts of crazy stuff happening? This could be advantageous to scalping, right? Could be. By the way, we've been streaming to both YouTube and ShareVision today. Now, I do have a couple of people watching on ShareVision. So if you're watching on ShareVision, give us a little chat and just say hi. I'd love to know that the people that there's actually real people watching and it's not just like bots or some like, I don't know. When I see that, I'm like, is that really 8 though? Also, you should like my channel because we need to get the 30 followers on ShareVision. Is the goal there. Nah, I saw that short. I can't FOMO. Really? You know what, man? NASDAQ killer? You've changed a lot. I think it's a good thing. I think it's a good thing that you changed a lot, but in the past, you would have been all in on that kind of a degenerate gamble trade. The short was rather limp. The way that played out was a little weird, but I think that the reason that it happened that way was because the whole market didn't get the news at the same time, right? It took about 15 minutes for everybody in the market to get the news. And I was a good 5 minutes late myself. Like that I was able to be in that trade for against the trend for 5 minutes and still only lose $10 essentially on my trade is rather lucky, let's say. That was awfully lucky. In fact, we got right out at 9.8 so we could, I don't know if they ever actually touched our stop there. Well, if I don't get any messages on Share Vision, I'm just going to assume they're view bots. Like maybe the platform themselves has share bots or something. Oh, I'm getting more headlines here. The Ukraine state of emergency is to start from midnight, the 24th of February, for 30 days, says draft text. Needed to go fast in my favor. Well, by the way, with gold, where does that put gold compared to yesterday? It's not at its yesterday's highs. 1910, and yesterday's high on the open was 1918. What about oil? The high in oil was 90, let's say 96. 96 would be the next big breach in oil. Treasuries here. So when you look at the treasury, just note the move that we have there is pretty tame compared to some of the stuff we've been seeing lately, right? So Jack Bro CBX says it's going to get worse. He must mean the Ukraine thing. Well, I have to say, to the thing that we were having yesterday, I don't know if I took a hard position per se, but the idea that the Ukraine thing was going to calm down, at least today, appears wrong. It could yet be the case that, 48 hours comes and goes. Maybe we give it another day or two because of that comes and go. Let's give it the weekend. So it could still be the case that next Monday comes around and nothing happens and the market chills out. But I can't predict that. And I said that I can't predict that yesterday. So I didn't mislead anybody, right? If you felt misled, let me know. I'm trying to do better. Well, why is Ukraine posting an emergency order that might even impose curfew if needed and bans mass gatherings unless it was going to happen? Sounds of explosions heard in Donetsk, presumably from the airport. Oy. Reports Sputnik International. I'm going to have to follow them. Even though I know that it's like Russian bullshit. What do you mean, please? Please what? Do you just like to say please? How are we doing? Man, now that I've been talking about cash, now you guys are, well, there's only 7 votes. Vote now. If you haven't voted on the puppy poll, please do so. Should this dog be named Cash, Gizmo, Rex, or Nostradamus? Because I would hate to have the situation where, you think that Cash is a really awful name. Wait, here's my wife coming in. What's that? Oh, you're doing that right now? Are you leaving the baby with me then? Okay. Okay. Love you. Bye. The other dog is too old and is being put to sleep. It's so sad. She's going to be super sad today. Your vote was for Pepe? Should have put that one, but I put Pepe out. We could, yesterday I think that Nostradamus did better than Gizmo. But I think that maybe the person that voted Nostradamus yesterday is voting Rex today, is I think what's happening here. We can do this for another 2 days, but then we're going to have to pick. My wife is ultimately going to pick, but I'm sure that she will factor in your opinion. Alligator says volatility is down. I'm surprised it's so small. Yeah, and liquidity is better today. Yeah, it always sucks. Well, we've so here's the thing about that, man. Like it's so because it's not like he's like dying per se. I think that he could probably last a couple more weeks, if not months. I wouldn't say that he seems particularly happy. A lot of the time he seems like he is like no clue what's going on, which is kind of sucks. So he's really not enjoying life. But then he keeps doing things like that has diarrhea on the carpet and stuff. Oh, and that was when my wife started to be like, yeah, when he becomes incontinent, that's a problem from her perspective. So, I said, well, you can decide what you want to do, but we are getting a puppy on Saturday. Maybe you want to do it before Saturday so that, one, you'll have something to blunt the sorrow of losing your dog, and two, so that the old dog doesn't teach the new dogs bad habits. So it kind of there's a little bit of conflict inside of me because in all honesty, I want him gone, just because it's become a burden and it's really annoying. But at the same time, I feel bad about killing. Like, am I being selfish, or are we really doing the right thing for everybody here? How can I know whether I'm really just being selfish, or if we're really making a smart decision, or is it okay to just be selfish in this case? Like, I don't know. I don't know, man. Questions beyond me. You know what I mean? Oh, you know what? Live action. I really liked Bandit too, but there is already a Papillon on. I mean, I don't know if I'm actually going to make this dog a dog fluencer, or if my wife will do it. I kind of want it to be her project, but there's a Bandit. The top Papillon on TikTok is named Bandit, so that's why we banned that name. That's why that one got thrown into the dustbin. I thought it was cute. It does look like a bandit. It does look like a mask of some sort, you know. But yeah, that's why that one got taken off. I think the treasury is going to push the highs again. Well, now they're back to where I got in at. So they were kind to us, weren't they? And the majority of the volume happened at 1.971. So the retail traders here in the micro treasuries were making money. But I don't know if how many. Well, there's a decent amount of volume up there at the top too. So maybe they did make their profits. Maybe I underperformed today. I still made $15, so it's okay. It's okay. But I hope she's okay. When we had to, okay, so we had 2 dogs, right? They're both Yorkies, and we knew that Mickey was getting old. Like, he was bumping into stuff, and he was starting to poop on the carpet and stuff, and was getting really, you know, I started to be more understanding. At first, I was like, good, really mad and like put him in the thing, but then I realized you can't control this. But then Sadie developed a tumor and she died first. So we liked Sadie. Sadie was a nice dog. Mickey was starting to be like grumpy old man, you know? Sadie, we liked her once, so when we had to put her down, she was not very happy. Yeah, but I just hope that with the new dog that she grows attached to the new dog. I think she kind of wanted a different dog, so I hope it's. But I really think that for our family, this will be the best personality. So we'll see. And in the meantime, we can watch the world, you know, a nuclear war start or something like that. Man. Except for that none of you believe that it's going to, well, not none of you, but 75% of you believe that nothing's going to happen still. So I can't sort that one out. Why don't you guys believe the headline? I take the position I don't know. I take the position I'm really have a hard time predicting what's going to happen in this case. I have a framework to deal with this. But you guys consistently come down on that nothing's going to happen. And I can't sort out why that is. It's very curious to me. Let's reset our DOMs here. He had a Yorkie for many years after she went blind. Yeah, well, I think he was having a little bit of everything. So, like, he definitely couldn't see as well. Because, like, when we would send him outside to go to the bathroom, it's like he couldn't find his way back to the door. And then just during the normal day, he would like wander around parts of the house and we'd do weird stuff. Like, he was going blind and he was losing his mind. But that was all fine until he started pooping on the carpet every day. Like, we had bought a carpet cleaner just to deal with him peeing on the carpet. Right. And it just kept getting worse and worse and worse. I think it's probably better for him. I don't think that he's very happy. I don't know. If it was me though, I want them to keep me alive as long as possible. But yeah, I don't know. You know why I feel this way? Oh my gosh. Can I get like super personal? Can I tell you like a super personal story? I don't know why I'm telling you guys this, but this just comes to my mind, and now it's like it's going to be there in my head, and I have to get it out. So with my previous marriage, my wife's mother got some sort of a lung disease, and she was going to get a lung transplant. She had to get a lung transplant to live. And she got sick, and because she was sick, you're not going to be able to handle the lung transplant, so you'd have to get better, right? And she decided to pull the plug. So from my perspective, it was like, well, you can still get through this and fight and everything, but she didn't want to. She wasn't that old. I think she was in her 50s. She wasn't that old. But she did it, and it bothered me so much. I was like, this is not what you should be doing. Bothered me so much. But that's what happened. And my ex was never the same after that, for sure. Kid stepped on her once and broke her hip. Oh, man. With this puppy, I'm going to be watching this puppy like a hawk, because I'm afraid that my toddler is going to hurt the puppy, because Papillons are pretty fragile. You think that what she did was, I don't know, man. It may be the case that her situation was way worse than I realized, or that she was letting on, but I was kind of surprised that she, still today, at this day, just really bothers me that happened. It was really frustrating to me too at the time. Like, another thing that I think was kind of bothersome about it was that it was really disrupting our life. And I was trying and keep things going. But I think that part of the reason why I was doing that was because I thought that it was going to be fine in the end. But then she ended up dying, It was like, oh, I probably did the wrong thing there. But there's nothing you can do about it. But, oh, alligator, here's a good point. We're coming up on first call here, aren't we? We're doing the rollover is happening for the treasuries. If this Ukraine invasion doesn't happen, that provides a really strong opportunity for the treasuries to move, doesn't it? Name the dog Ace. I mean, we haven't seen Ace for such a long time, and so I'm kind of feel like I don't know if I want to call it Ace. That did occur to me that would be a good name. NASDAQ Killer says yes, do it. Maybe we will do it. We just don't tell anybody, because eventually he'll get bored and he'll come back and see how we're doing and be like, oh yeah, I named my dog after you. He's like, oh man, Seth, I really am in your head. I kind of wanted something like edgelord kind of, because he's black. He's got like really dark colors on him and everything, but I don't know. I don't know if we'll really really settle on a name until we have him in our hands. But I do want to know what you guys think, and it certainly seems to me, that if the only factor in what we named the dog was what was best for the marketing purposes of this channel, that we should choose Cash. Seems to me that Cash is the best name for the channel. But that doesn't necessarily mean that's the best name for the family. Because if the girls don't like it, then they... I think my wife is okay with it, but one of the girls was really like, no, Cash is such a terrible name. I hate that name. Nah, nah, nah. It's like, man, you really don't like that name. That's an insult in my country when you name your dog on. Is it real? Well, I don't want to insult him. I still like him. Just wasn't working out, you know? That's all. Hopefully he watches our video on the inelastic nature of markets. The inelastic markets hypothesis. By the way, how well did that video do? It's about time to get going, but just one last thing here before we go. We'll end the stream, so Cash won. Santa Fe. Sit down, Ace. This is funny. Okay. Let's just check here. How we did such a good job on our video. Like, it was trending higher than usual. So I'm really happy about that. I appreciate it so much, guys. And there was some comments on the video too, which I really appreciate, because again, I think that this is really important. Okay, so wow, 180 views. That is well above what we normally tend to do. Oh, actually, it's kind of coming into inline. So it looks like you guys, more of you watched it at the beginning, but now it's kind of trending into more of the average view performance. That's interesting. But it's good. You guys are trying, you're helping. If you haven't left a comment on the video, I would really appreciate it if you do, because we want the world to know. I think this is an important thing. We want the world to know. I know that it kind of leads to some edge to us, but I really think we're making a world a better place. They understand this. It was a really good video. Oh, thank you so much. I appreciate it. I worked so hard on that video, man. Like, writing it, and so much thought has gone into that video. It really, I think that's the magnum opus. Like, I don't know if I might get better at editing. I might have more popular videos that are more interesting and stuff, but I don't think that I'll ever get a piece of information that is more valuable than that video. So you watched it 4 times? Really? Wow. Oh, it does it. Will it show me the engagements? No, not yet. Not yet. Nor are people clicking on the end screen. That sucks, but but it needs more time for me to show me all of the metrics. Yeah, leave a comment, guys. Comments on the video helps. So you have no clue. Like, when we if a video has, like, 5 or 6 comments, that's like what makes it take off. So, yep. All right, guys, I gotta get going. I will see you guys tomorrow. Stay safe. It looks like the market's going to continue to be crazy wacko, so I'm in risk off mode once again, but we'll still be here tomorrow and Friday. In the meantime, stay profitable, friends.